and Company. Dean, good morning. Thanks a lot for joining us.
Morning.
What have you made of the price action that we've seen over the last few days in equities? Do you think it's start of a correction or another buying opportunity?
Yeah, that's a great question. I mean, in the U.S., obviously, we're seeing some volatility right now, and that's on the back of what we think is, if you look at fourth quarter earnings estimates, it's been revising down. So I think the market is reacting to that. Of course, there are also political uncertainties in terms of the debt ceiling and where inflation may be heading. We have large, the bills that are on the table for Congress and the politicians to figure out. So all of those things are in the mix. Now, however, if you look at the bond yield, it has been rising. And the question is this a result of the improvements in the economy? And so therefore, the bond market is pricing in overall positive sentiment? Or is this coming from the rising inflation trend that we're seeing and the bond market is perhaps pricing that in? Well, I think when we look at the price action in the U.S. and particularly the bank sector, if you look at the bank sector, they have been breaking out. So in the last couple of days, we've seen a lot of banks breaking out. JP Morgan, Bank of America, even goes down into smaller banks like Western Alliance and others. And so that's an indication to us that the bond market is looking forward to improvements in the economy. And so therefore, the bond yield is heading up. So I would be in the camp of, yes, there's volatility right now, but I think you can be selective and buy on dips. And because historically in the U.S., the fourth quarter usually is very good. In the last 50 years, we can count just on our hands the number of times that the index has thrown off negative results in the fourth quarter. But majority of the time, fourth quarter has been very good. Now, if we head over to India, obviously the market is a bit extended. And in fact, I took a look at some of the liquid stocks in India, and basically 67% of them are trading above the 50-day moving average. Now, when we compare that to 1 month ago, it was 69%. So there has been a slight slip in terms of the number of stocks trading above that key moving average. And by the way, 83% of these liquid stocks are trading above 200-day moving average. So we are seeing a bit of a correction in that front, but I'm still seeing a lot of stocks that are setting up and ready for breakouts. And I'd be happy to go through some of them if you'd like.
Of course, we would. I mean, that's what our viewers and investors look forward to, right? Actionable information. So, I mean, since you spoke about that, take it away. What are the spaces or stocks that you still like within the Indian market, which one can buy now?
Yeah, so, our approach is very stock specific, but what I would say is the bank sector is looking really good right now, or the financial sector. So you have banks like HDFC Bank, you have ICICI, Kotak Mahindra is now ready for breakout, is just, getting above resistance here. Then you have IndusInd Bank, you have Power Finance and Canfin Homes. These are all financial stocks that are setting up and ready for breakout. So I'm quite excited about the financial space right now. And then if we move to, let's say, basic material, I still think Pidilite Industries is actionable. We'll see Asian Paints as looking very good. And then in the consumer cyclical, Wellspun is a bit extended, but it's still looking really strong. Then you have Tata Consumer Products. It had a bit of a pullback, but I'm noticing that it's catching support at the short-term moving average. So that could be an opportunity. Then you have Jubilant FoodWorks. That's also catching support. Zydus Wellness. And then in technology, a lot of stocks are extended, but, I am seeing some opportunities in Infosys. It is pulling back. But if you see it catching support at moving averages like 21-day moving average or 50-day moving average, I wouldn't hesitate to buy that. And then also Larsen and Toubro, that's setting up and catching support at the moving averages.
Okay, so that's plenty of names to catch on the financial side, on the consumer side, and even some IT names. So, Dean, what about power? This whole global power shortage has gotten even Indian power stocks excited. I mean, we've got a coal shortage here, and look at what Coal India is doing. I mean, this is a sleeping giant. That stock hasn't moved for years. But what are the sort of the indicators telling you? Is this just a trading rally that's playing out in coal stocks or
Yeah.
power stocks, or is it more than that?
No, I think it's great opportunity in that sector. So in utilities, I'm noticing Power Grid Corp is just breaking out, went through a long period of consolidation, and that stock is looking really exciting now. If you look at the chart, it has gone through resistance, multi-year resistance, and it's looking like it's ready for a strong breakout here. So yeah, Power Grid is definitely one to keep an eye on.
Okay, that's on the power stocks. What about the telecom stocks, Bharti in particular, if you've tracked that?
Yeah, Bharti, it's a bit extended. It's pretty far above key moving averages. So, I would keep an eye on some of these stocks that are really extended, because I noticed a lot of stocks are, let's say, 20, 30, 40, 50% above the 200-day moving average. And when that happens, there's always temptation for profit taking. But if you see it pull back and Bharti sort of catch support at, let's say, 21-day moving average, then that would be a buying opportunity. But make sure it catches support and it bounces from there with good volume, and that's your signal to get in.
The situation in China, the power outages are posing a new threat to supply of chips and other goods. And in any case, there's been a huge chip shortage affecting industries like autos, right? How do you approach it then? Do you stay away from these spaces, or do you use the dip as buying opportunity?
Yeah, I mean, when we look at auto stocks in India, they're not quite ready for a breakout at the moment. I think the market is still struggling with the question of, the supply shortages, and perhaps on the demand side as well. And so, I would, take a look at autos when they come up to, sort of what we call a pivot and ready for breakout. But in my opinion, they're not quite ready yet.
So to round it up, I'm coming back to where we began, Dean, and that's the entire global setup. From what you said, our understanding is that we shouldn't get too perturbed with this rise in yields. Even the dollar index, for that matter, above 94 now. Are you saying yields and equity markets can keep rising together?
Yields, I think, will rise because in the U.S., the COVID numbers, that is sort of Delta variant has peaked. The numbers are coming down. The economy is ready for reopening again, and we're seeing a lot of reopening trades starting to work. As I've mentioned, banks are starting to rally. But in terms of the dollar, that's a different story. If dollar continues to head up because U.S. outlook looks pretty positive, then I would keep an eye on India for sure, because you guys are right. The rising dollar is no good for India, and so then I would look at price action for each stock and make sure that they're catching support at the moving averages. If not, you ought to start trimming, but we're not there yet.
All right, we will leave it at that. Thank you so much, Dean, for joining in. It was a pleasure speaking to you. A lot of actionable information there. And thanks for enlightening us. Well, that is the view.